report by Meristem says due to the level of uncertainty in the fixed income and FX market, the direction of yields on Nigerian debt instruments would pose a hard call this year. However, they add that stronger demand for domestic funds by the government should lead to higher rates. Damilare Ojo, Research Analyst at Meristem, joins me to unpack this. Damilare, thank you for joining us today. To what would you attribute this high level of uncertainty in the market? Could you help us better understand that?
Thank you very much for having me. On one hand, we are looking at the possibility of an increase in rates, which stems from the huge deficit that we have in our 2022 budget, and we are also looking at the direction of yield, globally. It is expected that in this year 2022, a number of advanced markets are going to increase. I mean, there will be an increase in rates by the monetary authorities of advanced economies. So that would also, might also affect the direction of yield in Nigeria. But looking at the fact that the CBN at some point has been, if you look at the direction of borrowings from the federal government, we see that the CBN has been sort of shielding the federal government in terms of its debt levels, particularly with using ways and means, and then that has been maybe influencing that has been influencing the direction of yield in the primary market auction and in the secondary market as well. So that's could lead to a downward pressure on yield. So altogether, combining these factors, we think that it is a bit difficult to call the direction of yield in 2022. And you can even take a clue from the primary market auctions that have been held so far for treasury bills. In the first primary market auction, there was an increase in yield on the 364-day instrument, while in the second primary market auction, there was an increase in the yield on all the three maturities, 91-day, 182, and 364-day instruments. So this shows that there's a lack of policy guidance on how yields are going to evolve in Nigeria in 2022. So that is what informed our outlook of the high uncertainty regarding how yields are going to move in Nigeria in 2022.
All right, I'd like to quickly just take you back to the U.S., your position on the U.S. Fed rate hike and how it could potentially affect our markets here now. A number of analysts that we've spoken to have said they do not think that there could be a risk to our market, and indeed the CBN governor has also did say that. And the argument is that since 2020, we've seen that broad exit of FPIs, and all that cash is yet to return. So there's probably, our chances of being affected by rate hikes by the U.S. Fed is probably slim to none. What is your response to that?
Well, I won't say that. They are also very, very mindful of the fact that the increase in yields in rates in the U.S. And other global economies might not so much impact the yields in Nigeria. And specifically, we are looking at the level of activities of foreign investors in Nigeria. Last year, if you look at the level of activities in Nigerian fixed income markets, over 77% of level of trade activities in the Nigerian fixed income markets were carried out by domestic investors. However, you could also look at what's going to happen to Eurobond. This global rates, from US, from the Bank of England, and these major advanced economies might affect, yields, on Eurobonds, and that is also one source of funds for the federal government to bridge the fiscal deficit. So that is where we are looking at how that might also impact the Nigerian fixed income markets, the sovereign debt instruments of Nigeria.
Could you also quickly just highlight other aspects of the report, highlights of the report that are worthy of note that we should know about?
So, for us, we are looking at value in sustainability. We are looking into how investors, there have been increased traction on green and social impact bonds, and that is one area that we think that might also continue to gain traction globally in Africa and in Nigeria. You know that Africa is at the receiving end of some of the effects of climate change, and there has been that increased activity even from some domestic issuers, particularly that was led by Access Bank PLC. They issued, an euro bond, and there's going to be a maturity, I think next year, and you might see a rollover of that, and it's very much likely that works are already going on that, and even from different other issuers, because even the regulator, the Securities and Exchange Commission, has already, put out regulatory guidelines on issuance of, activities around sustainability thing, instruments in Nigeria. So we think that that is one area to watch out, to look out for in 2022 and beyond.
Now let's talk about the fate of the corporate bond market this year in Nigeria. If we do see heavy borrowing on the part of the government, last year we did see a lot of commercial papers, being, issued by companies at competitive rates, and it looked like corporate bond market was booming. But now that we could potentially see a surge in borrowing in the domestic market by the fiscal authorities, what kind of impact are you expecting this to have on the corporate bond market?
Well, I think that the corporate bond market will continue to, there'll continue to be activities, there'll continue to be issuances of commercial papers and of bonds in 2022. And so far in 2022, we've already seen a number of corporates, particularly in the financial services sector, that have introduced, that have raised funds through commercial papers. And, if you look at, given our direction, our outlook for youth being uncertain, and we still think that the traction that is going to come, we are very much likely to see a lot of activities in this Q1, because it is uncertain where youth are going to go to, but currently you see that there's been a reduction in yields on bonds. So I think that a lot of corporates are going to want to tap into the market as soon as possible in order to raise their funds at relatively cheap rates before, if at all, towards, spending of, when the government will come heavily into the market to raise funds, and that might impact rates, and that might also impact the yields on the instruments that are issued by corporate issuers. So I think that there's going to be a lot of activities in Q1 2022, as you have already started to see in the markets currently, in order to take advantage of the yield environment, which is still relatively low.
I wonder if you could speak or share your perspective on the government, on the debt servicing for the government this year with all that borrowing, the fiscal deficit at over 6 trillion. With the additional provisioning for fuel subsidies, and we're hearing, or we're being told it's likely that it could widen quickly. In 60 seconds, your perspective on debt servicing this year.
Well, I think that there's still going to be pressure, and the main source of the pressure is on revenue. If you are not able to generate more revenue, that is where we'll continue to have issues around debt servicing. But if you look at the debt service ratio to revenue, there's been that clamor that is very high, and debt servicing is taking a lot of revenue. So I think that the government is going to look more to getting more revenue. There's nothing we can do about that. The government has to spend to fund the 2022 budget, and that is going to inform more borrowing. There's nothing you can do about that. So I think the pressure point would be, thinking about how to increase revenue.